Good afternoon, everyone, from a very warm Notting Hill. It's Wednesday, the 9th of June, and you should get this in your inbox on Saturday, the 12th of June. Lots of things could change between now and then, but the situation in terms of market timing, the trends are looking good. Short-term trend is up, underlying trend is up, and that confirmed up has been in place since the 11th of November last year. And the colour guard is bullish, and as you can see, we've got a little black star in this green light, which is saying that the price of the composite is up day over day and week over week, and momentum is also rising. And as you can see, the MTI moving up, but still quite a long way away from a mega overbought situation, and the buy-sell ratio sitting well under a mega overbought situation at 3.5. So if we have a look at the market timing chart, so just click on timing on the chart, and that's the chart itself. And pretty much everything in the investment world, folks, is trying to get through old highs at the moment. The S&P is bugged at an all-time high, and with any luck we'll break that today. You'll know exactly what's happened when you get this. As you can see, if we pull this up a little bit, this old high has held this market for 1, 2, 3, 4, 5, 6 days now, and we shall see if it can get through. I think it will. As I pointed out in the past, this low was an exact 62% retracement of this range. That's normally positive. So in the essay, I wrote the essay because last weekend on Facebook there was a comment, what strategy should I use if I don't want to sit and look at charts all day? And I think the lady was from Canada, and I have no hands-on experience of the Canadian market whatsoever. I have investments in South Africa that I don't manage that carefully anymore. I've had some of them since 1983. I have the portfolio that I speak about every Monday afternoon in the UK, and I run some spread bets in the American market. So the worry-free investment strategy has been well tested in the UK market and the American market, and for anybody who wants a hands-off methodology to make money in the market, then I would certainly suggest the worry-free trading strategy. And if you can muster the discipline to follow the simple set of rules within the worry-free investment plan, then I don't think you need to worry about cash. Again, it comes down to execution. It's very easy to talk about these things in hindsight, but as the market is moving up and down, it's a completely different matter. So trading's all about execution, and that's why in these essays I spend so much time talking on my own cut on trading psychology. So on the chart we have the longest term measure of the trend, a confirmed call, and after the COVID sell-off we got a confirmed call on April the 27th, tattooed on my subconscious. As we went into the second 1 month lockdown in November, we had a confirmed down, and then of course the vaccine rescued us, and we've been in a confirmed up situation since the 11th of November. Now the worry-free investing strategy, I do a series of webcasts on it that last about an hour and a half, called 3 a month in fact, called A Proven Method of Making Money in the Stock Market. And there'll be 3 of them running during the course of June if you look on the web page. But in essence, the worry-free investing technique looks at the UK's safest shares as measured by the proprietary VectorVest metric relative safety. And in the essay I've defined what goes into relative safety. And on a scale between 0 and 2, if you've got a stock with relative safety of above 1.3, this is a company that's making money, and all those financial ratios are getting better. It has a strong history of performance, and that's where we want to be. So I have a little search to find those that I'll present in a second. But in essence, ladies and gentlemen, when we've got a confirmed up, we want to be fully invested in high relative safety stocks. Now, if we'd got in at the 11th of November, and I assure you it was difficult to get in at the 11th of November, because there was certainly an awful lot of COVID news around. And as I tell everybody or anybody who listen to me, when it's time to buy, you won't want to. So our objective is to be fully invested when there is a confirmed up in place. Now, sooner or later, we're going to get a confirmed down. I have no idea when it's going to come, but we will get a confirmed down, as sure as day follows night. When we do get a confirmed down, we hold our positions, but we watch our stop losses much more carefully. If the general market is falling, then there's a much higher probability that even high RS stocks can fall below their stop loss. In a confirmed down, we build a cash position. So let's say that we're fully invested with 10 stocks. We get a confirmed down, and within a couple of weeks we find that 3 of those have closed below their VectorVest stop loss. We simply exit those 3 and build a cash position. We do not replace. So in that example, we would be 70% in shares and 30% in cash. When we get the next confirmed up, we run my little search again, and we get back to being 100% invested. Now, in this little pullback that we had in November, none of the high RS stocks were stopped out. And this one last February, stroke March, everything was stopped out. Every darn thing was stopped out somewhere about there. So we had a full cash position going into the bottom, which was finally confirmed on April the 27th. That's the process. And there is a guide to worry-free investing that you can download from the VectorVest program. Now, what Unisearch do we use? Well, if I go back and go to Unisearch, there is a long-term winners RS descending Unisearch. It's under the retirement folder. Now, I have added, based on the work that Mark did from our Guildford group, I've added one extra parameter to that, and I've added relative value, which measures the share price appreciation potential in relation to a AAA rated corporate bond. I've added relative value greater than 1.25 because I've proven, many people have proven, that adding that greatly helps the capital gains of the portfolio. So what I suggest, folks, is that you just find long-term winners RS descending in the retirement folder, and then just copy it and add this line. I have it in the Eyes of Millionaire folder, which was a course that I took some months ago. You don't have to put it there. So let's have a look at the search. RV greater than 1.25. I put the standard volume is 50,000 shares as measured by a 50-day moving average of volume. So this is not a trading search. So liquidity is important. You want to be able to get out easily when the share closes below its stop loss, but at the same time we're not in and out every few days. The stock's recommendation, and we've got buy, sell or hold, is not a sell. So they're either on a buy or a hold. Now on this particular version, I haven't got that little double arrow means not. I haven't got AIM. Although many people apply this to the AIM market and they say they do just fine. And we want the stock's price to be above 50p. Just be careful. If you run VectorVest US, 50 means $50. In the UK it means 50 pence. So that's the search. It couldn't be simpler. And all the shares that come out of this are in fact sorted by relative safety, brings the safest shares to the top of the pile. Now these are really very special stocks, ladies and gentlemen, because these are shares that have got a proven track record of making money. All their financial metrics are getting better, and at the same time they're growing earnings strongly, which is a big part of relative value. So some very special stocks, and there's not that many of them in the UK market. Now I've taken and gone back to the 27th of April last year, and I've simply run that search, and if I quick test the top 10, which is okay, but a proper back test would be better. This is a linear test between last April and last night, and clearly lots and lots of things could have happened in between. And as you can see, that portfolio is up 54% and the market's up 34%, which is significant outperformance over a very good market. This worry-free investing strategies had a great run over the last few years. And if we go to the last confirmed up, which was on the 11th of November, I run the Unisearch, a lot of the same names on there, and I quick test the top 10, and as you can see, significant outperformance over the market itself. The market's up 13%, and this is up 17.5%. If I was managing your money, folks, I would put 80% of it into the worry-free methodology, and use the power of VectorVest to find shares that should grow their earnings reasonably strongly as measured by relative value above 1.25, and have a very safe track record of making money as in fact measured by relative safety. A relative safety that's high with a relative value above 1.25 is a very special stock indeed, and as my old rugby coach used to say, it allows you to let the ball do the work. Ladies and gentlemen, that is the search that I recommend, and I think about 80% of the portfolio that I talk about on a Monday afternoon, maybe not quite 80, but 70% of the portfolio that I talk about on a Monday afternoon came from there. I have a couple of recovery plays, as you know, and which are building stocks, and I have a couple of gold stocks in the portfolio as well to add extra mix. I manage money for private individuals, very rich private individuals, some years back, and I did exactly the same thing. 70 to 80%, depending on their risk tolerance, in worry-free type shares, and then about 30% into more aggressive trading. It's not unique. It's pretty much the same model that George Soros had at the Quantum Fund for many years. Him and Stan Druckenmiller pioneered that sort of twin approach. So I hope to see you all on Monday afternoon at 1:30, where we'll discuss the market in a great deal of detail. And just remember, next Wednesday night, on the 16th, is our Streetwise Investors Club. I won't be there because I'm in fact doing my module of the When to Sell course, but it'll be run by Susan Thornborough, and she's been running user groups longer than I have. So don't dismiss the worry-free trading plan as being too conservative. That 54% that I showed a few minutes ago, very few day traders have made 54% in the last year. And in fact, most day traders have in fact lost money. The stats from the spread betting companies prove that. Once you get very close to that noise, There's a great deal of randomness about, and also the robots have been programmed to, in fact, annihilate your. They know exactly where you're going to put your stops, and they will spike it down and take you out all day, every day. So you've got to be really very good to be a day trader and to be profitable. The VectorVest Worry Free plan stays well away from the noise and focuses on the UK's best shares with that subtle combination of a proven track record of making money safely and the ability to grow earnings reasonably strongly. It's quite a unique combination. There's not that many shares on the market, and it allows you to make money with minimal effort. When you get a confirmed down, you need to be on your toes, because there's a much higher chance that even the highest RS stock can get stopped out. And as I said, last February and March we were stopped out of the whole lot. Let's hope that COVID sell-off doesn't come back again in a hurry. Thanks very much indeed. Bye bye.